Okay, let's look at the fourth reason why a bank may decline your application, and that has to be with credit issues. So let's get started. Number one is very important to realize that the credit history and the credit score is one of the most important things that you'll have to deal with in a mortgage application. If you have a low credit score, it's a problem, and we're gonna see how most low credit score, believe me or not, can be improved. The only problem is that it takes time. So as long as you're patient, your problems can be solved. But if you have an insufficient score, when you have over 680, most banks will say that you are eligible for one of the best pricings. But if you're a beacon score between 620 or 680, a lot of lenders will not like that, and anything below 600, it may become a problem with major banks and credit unions. We'll have to go to what we call B lenders or other types of lenders, specialized lenders that will look at applications with credit score below the 600 level. Okay, now, poor payment history. We are requesting money. The number one thing that the lender wants is for you to pay the mortgage that they're going to give you on time. So if they already see that you're not doing that with other accounts, they're not going to like it. So we need to, there's ways to troubleshoot that. We need to tell them why that happened. Maybe it's reasonable because you went through, perhaps there was a health issue, or perhaps there was a divorce and it creates a lot of stress, things of that nature. You didn't have control of the accounts. That helps a lot. But we need to provide a reason and decide between you and me, or you and the underwriter that I'm going to assign to your file, how we're going to proceed, if we're going to better resolve this issue over the medium term, or try to apply right now and try to use the strategy of using maybe a slightly higher interest rate mortgage for 1 or 2 years, solve the problem, and then refinance into a lower rate mortgage. So that's some of the solutions. Again, the second one or the third one is high debt levels. High debt levels means that when you use all your credit facilities, banks start to get concerned because they feel that you may just like to get into debt and it's going to become unmanageable. So the high debt to income ratio is one of the areas that they look at. We won't go into much numbers today. Credit utilization. One of the things people don't understand, but one of the things that increases your beacon score or your credit score the most is not using all your credit facilities to the maximum. So for example, if you have two people, one with a credit card of $5,000 and they have a balance of $4,500, if they maintain it that way for some time, their credit history is going to go down. But if the brother has also $4,500 in that credit card, but the credit card limit is $15,000, they're using only 1/3 of their credit, and now their credit report is going to go up. Given that everything is the same, this is one of the easiest ways that you can increase your credit score, by increasing your available credit compared to what you're using on that account. So those are one of the solutions that we can bring to the table. Now, bankruptcy and consumer proposal. If you have went into debt troubles and you had a bankruptcy or consumer proposal, yes, you can get a mortgage. It says here on the slide 2 to 6 years waiting period. No, not really. There's lenders that will give you a mortgage one day after the discharge of your bankruptcy, given certain conditions. And the longer and the further away you are from that bankruptcy with reestablished credit, the better it's going to be for you. So there is solutions. If there's an active consumer proposal, what I found out is that most clients want you to resolve or to finish paying that consumer proposal. A consumer proposal is basically a debt consolidation where you hire a company to negotiate with your visas, with your credit cards, to pay a portion of it, and then you just maintain one payment and finalize paying everybody. In those consumer proposals, a lot of the lenders did not get the full money, so that's why the lender prefers that you pay that off in full, and then in order to be able to give you a loan. Some lenders, we can use the same proceeds to pay the consumer proposal, but some lenders will not allow that. So we'll have to troubleshoot if this applies to you according to your specific circumstances. And if there has been multiple insolvencies or bankruptcies, it's still possible. There's always a solution, but it becomes harder and harder, and you may not be able to see the rates that you get advertised all over the internet, but you may be able to get a solution that is affordable and convenient for you. Now, insufficient credit history, if you're new to Canada, or perhaps you never bothered to use credit because you like to pay cash for everything. Believe me or not, that creates a problem. So we'll have to have alternative references, like bank references, maybe rent payments, maybe any account that you've paid on a regular basis that we can get confirmation over 6 of 12 months, so we can build up a manual credit history for you. So thin credit means that you only have less than 2 accounts reporting on your credit report, less than 2 accounts with an available credit of $2,000 or less. That is considered a thin credit. If you have 2 or more accounts with credit limits over $2,000, then you should have a sufficient credit history, given that you've been reporting for about 2 years. And new accounts also are included in the insufficient or thin credit because they haven't had enough time to report enough payments, so the banks can see how are your habits. Insufficient, this one we already saw. Excessive credit inquiries. Most banks and all over the internet, they tell you and teach you don't request credit too much. I think it's gone the other way. People are too worried right now for hard inquiries. Have in mind that as of 2024 January, if, for example, you're applying for a mortgage and you apply within 30 days, all those requests for credit are combined into one. As a mortgage broker, we even go one step further, and we basically protect your credit history a lot, because we only do one pull credit. We pull credit only once, and we can go to different lenders. But don't get too worried. This becomes a concern if you have been requesting credit for maybe 4, 5, 6 times habitually over the last 2 or 3 years. Then it becomes a problem, and your credit score can go down. And recent applications, same thing as I explained before. Okay, now delinquent accounts. Sometimes there is mistakes in your credit file. We'll look at that in another slide. But sometimes if you are not paying your accounts on time and there is not an explanation, it becomes really tougher, or you will get offered high rates and fees on your mortgage. Okay, and the only solution to that is going back to paying your accounts on time and let time go by. Not because you just paid off an account yesterday means that everything is good. If I can say something is very similar to if you stole something yesterday, but today you haven't stolen anything, that means that you don't steal. It's kind of the same concept. For you to be established as you don't steal, it needs to happen for a long time. Okay, so if last time you stole was 20 years ago, okay, that is totally different story. Judgments or liens, we have to look at it, because again, there's mistakes, but there is judgments or liens. We have to resolve them before the lender gives new money, because otherwise the lender will see that you have other obligations that will affect your existing mortgage. And unpaid taxes is a big one. Some lenders will not allow you to pay taxes with the refinance proceeds, so you have to come with the cash up front. But we do have solutions for you to pay the taxes first before you get into a new mortgage. If you are deferring your taxes, that is unpaid taxes for most lenders, so you need to pay them upfront, or we'll need to give you a solution so you can pay the taxes first before we grant you a mortgage with any of the banks or credit unions. Fraudulent activities, self-explaining. If there has been suspicion of fraud, sometimes in the credit report you have suspicion or fraud of activity. The lender will call you, will do another due diligence, and besides the signed authorization for us to review the credit, the lender itself will call you to verify over the phone that you do want to take the new mortgage. That's only to protect yourself. If there is reporting discrepancies, it's a big issue because you don't have control over your credit file. So when you request a new mortgage, maybe you see that there is accounts that does not belong to you because maybe the name was similar or they got mixed up or something. We need to fix those before we can grant credit if they are relevant to your mortgage application. Now, all of that can be solved. It's just that it takes time, and we need to work with some timelines. Super important, co-signer or guarantor issues. If you have co-signed or guarantor, you are a guarantor of a loan, that means that you are responsible for that loan, even though you may not pay it, even though your company pays it. Sometimes it's not even another person, it's just your own company. That creates trouble. There is exceptions to be made, number one, but a lot of times the best solution, if you want to have a lot of lenders options, is to remove yourself to be a co-signer or guarantor. So try to get the other person to apply on their own and remove you as co-signer or guarantor, or try to help that person find a solution for their problem different than you being a co-signer or guarantor, because that can create a lot of problems and it can reduce your mortgage approval by hundreds of thousands of dollars if the payments are too high. Lack of improvement after past issues. If not because you paid something, that means that your credit report will improve. Okay, that's part of it, but you need to be active and you need to look at your credit report and work with somebody that understands credit history to make sure that there is accounts that are not dragging you down. So you just have to be aware of this. Okay. High risk credit behavior. This is regarding revolving debt, and if you use all the credit that you've been granted, the algorithm for Equifax and TransUnion and some of the reporting agencies consider that high risk, so your points will go down. So I've seen people with low credit scores, even though that they always pay on time their accounts and there is not delinquencies. Why? Because of this. Remember that it matters what you owe compared to what the available credit for that account is. Okay. Credit report errors. There is the reporting agencies are companies. They are not perfect. There is tons of errors. There's process in place to remove those errors. But again, it only takes time. We help hundreds and hundreds of clients to bring their credit history back to normal so they can get the right mortgage. But it's just the issue of not knowing that something was reported on your credit history and it should have not been reported. But again, the good part about this is that all can be solved. Other red flags: lack stability. Share accounts. Share accounts is similar to co-signing. Okay, so just be aware of that. And people think that it's good that they close accounts. Not necessarily. When you close accounts, if you close too many accounts, you can go back to the thin credit category because there is not a history. So you need to maintain a healthy balance of open accounts, minimum 2, that's our recommendation, 2 with available credit of 2,000 or higher, reporting for a long time. If you have a credit card, some people change credit cards every year because of promotions. That affects your credit history because every credit card will start reporting from the moment it's open. So you may not have only 1 year of reporting history because all the others have been closed. Versus, for example, I have had several accounts for 20 years. So now if I request a mortgage for myself, the lender is going to go, holy crap, this is nice because I can see Camilo's payment habits and history for 20 years. And he always pays on time. he maintains lower balance than available credit, so my beacon score goes up, and the lenders want to give me money. If I would change my credit card every year, even though I have history for 20 years, but 20 credit cards open and close, my beacon score will be down, and the lender will not be happy to grant me a mortgage. As funny as it sounds, that's how it works. Failure to meet lender-specific criteria. I have talked in other videos about this. We just need to know the lender's credit score criteria. And again, different lenders have anything. There is lenders that will accept a beacon of 450, and there is lenders that will not give you a mortgage unless you have a beacon of 680 or 700. So there is too many things to show in a video, and actually it becomes very technical, complicated, but that's the role of a mortgage broker. So we have to have the lender criteria and guide you to the appropriate lender. Have in mind that when you're looking at advertisement of rates, it's always the same. When a financial institution or a broker or anybody advertise over the internet a rate, usually the rate is the lowest, and to get the lowest rate, everything, and I mean everything that we have discussed in this video and the previous 8 videos that I recorded, has to be perfect. So the probability that a person will get an approval at that loan sometimes is very low. And what they do, they use that as a marketing technique to bring the client in, and then they switch and they tell that they didn't get an approval for that loan, and they try to sell you on other products. I prefer to be upfront, and when I give you the options, are options that you can really take, and you can decide on those options. Okay. Now, in conclusion, credit score is a big thing. You need to be aware of it. Hopefully, you have a credit monitoring system, so you know where your beacon is all the time. Because if it's going down, you have to be proactive and start working on it. And have in mind that if you have credit issues, that does not mean that you cannot get a mortgage. It means that we need to do a little bit of extra work, but definitely you can get a mortgage. Most credit score problems can be solved, and they just need a little bit of attention, maybe a little bit of money, and a little bit of care and time. So, because when you fix a problem, the algorithm of Equifax and TransUnion and the credit agencies see that there's an improvement. There may be a slight jump on your credit score, but it doesn't mean that's going to be perfect. Over time, they will keep increasing if you're doing the right things properly. This is Camilo Rodriguez, owner of Mortgages Lab, with my beautiful wife, passionate broker. I'm passionate about building wealth with debt. I am the past president of the BC Mortgage Broker Association, been doing mortgages for 22 years. Happy father of 2 kids, married for 25 years. I love traveling. I love soccer playing. My team is Real Madrid and the Whitecaps, and I love to travel. I'm a family guy. All the best. See you in the next video. If you have credit issues and you want solutions, contact our office. We'll be super happy to help you.